Is the secret to profitable trading just letting a robot do the whole thing? In this video, we're going to talk about grid trading robots and how they actually can be very powerful for traders. In fact, grid trading systems, if you don't know what they are, we're going to talk about what they are, how to employ them, and some things that you have to consider, as well as some ways to actually just let a robot do a lot of your trading for you. Now, this sounds complicated and it sounds like, oh, you need to be a programmer to do all this, but don't worry. It's actually not the case. There are some pre-programmed robots out there that can allow you to set up grid systems and trade them. And we're going to talk about that. Today's video is sponsored by Forex VPS, which is the best VPS service for robot Forex traders who are looking to set up their trading platform on a cloud environment. And I'm going to tell you more about that in just a little bit. Stay tuned. So first of all, what the heck is a grid trading system? A grid trading system, to the best of my way of keeping this simple, is a way to essentially leave a lot of the technical analysis and discretionary trading aspects completely out of the picture. A grid system is really truly as simple as saying, I want to buy some market or sell some market in pieces over a duration of time at different levels. So for example, let's say that you're bullish on gold and you buy some gold and it goes down further. You say, well, I just want to buy a little bit more gold. I want to dollar cost average. If you've ever heard this saying, dollar cost averaging or DCA, there are many different types of DCA bots or robots that automate this component to basically build and or accumulate positions and then distribute or offset those positions after they move into profit. So I've got a really simple screen visual here that I can show you. So this is the idea of dollar cost averaging. It is really, really simple. Let's say you're bullish on gold or you're bullish on the euro or something like that. And you decide you'd like to start buying the euro or buying gold or whatever you're accumulating in pieces. So you say, let's say my first buy comes in right here. I pick up a long position. And then you have a second buy position trigger when the price actually starts to move against you. So you're building a position, you're averaging your cost down. Now, I already know there's people who are going to say that sounds really risky. And yes, it actually can be. So we're going to talk about the pros and the cons in just a moment. There are many things that you have to consider when running a grid robot or system. The next thing is, of course, you could build a bigger position. And then the idea is that once the system starts to realize or has floating unrealized profit, you look to close some of the position. And there are different ways to do this as well. Now, you can also reverse the script and you could say, instead of buying on the way down, maybe you sell on the way up. If you're bearish on a particular asset, currency pair, commodity, etc., whatever you want to trade it on. And then there are also other ways of grid trading, which involve buying something and building a bigger position as it goes up, or selling as a market goes down and building a bigger position. That is another way of trading that's a little bit different than what we're talking about in this video. Grid trading is basically dollar cost averaging. Dollar cost averaging is something that actually can be really effective if you do it right? So let's say, for example, your dollar cost averaging on gold and you say it's at 1800 and at 1750 I'm going to buy another, and then if it goes down to 1700 I'm going to buy another bit, and then eventually when it rallies back to 1800 or 1850 you've got a nice profit because you built a position, you average down, and then the price goes up. So again, it's a really, really simple concept, and traders can take advantages of grids for this very reason. But you have some questions that you've got to answer before you jump right into grid trading, because I don't recommend you just grid trade everything. Sometimes people think that just by simply buying in pieces or selling in pieces that it's just going to be an easy way to make money, and that is not the case. There are still some things you got to consider, like in all trading, as well as some pros and cons to think about. First of all, you have to ask yourself, what asset are you going to be trading this grid system on? Are you going to trade the euro, the dollar, yen? Are you going to trade gold, silver, the S&P 500, oil? You have many options, right? And you have to pick wisely. You have to actually choose something that you are convicted on, bullish or bearish. You actually have to have some sort of bias here so that you can build a directional bias and be willing to build a bigger position. The next one is, how much will you buy in these tranches or in these pieces that you're picking up? You obviously need to be very careful here, because if you're picking up way too much at once, if the market continues to go against you, it can lead you to blow up your account. So that is why people, when they talk about grid systems, there's a lot of red flags for people. They say, oh, no, don't want to do that. Don't want a dollar cost average, because it does involve, in many cases, not using a stop loss. Now, I'll talk about that in a second. There are some considerations there. Obviously, you're not building a stop loss here because you're not getting out of a trade. You're actually adding to a loser, which again can be, and if abused, it can be terrible, but if done right, there are some ways to actually build positions in a safer way. There's always risks in markets, but this is a safer way to approach it. Is, in my opinion, if I'm going to run a grid system, I am going to be buying in really small amounts, meaning I am buying for this second piece here. I'm buying really small amounts and building slowly. So that's the next part, is when on how far between each buy or sell are you going to place things. So let's say you're buying a piece of gold, or like you're buying gold, right? Let's say you take a 0.01 lot size if you're on a Forex broker, or if you're trading ETFs or futures, you take one contract, or you take X number of shares, depending on whatever you're doing. It doesn't matter what units or what you're trading on, futures, ETFs, foreign exchange brokerage, whatever. The point is, trading in very small sizes. Let's say you're using a foreign exchange broker and you use a lot size, right? So you use 0.01. So you looking to just take little tiny pieces and build over time on the account. So again, you have to ask yourself, how much will you buy? How far in between each buy? How far is this distance that we see, right? How far in between each level of the grid, right? These are grid levels. How far in between do you actually want to space yourself? Next up, how much profit are you going to go for when the market actually does turn and goes in your direction or in your favor? Are you going to try and go for X number of dollars, X number of percentage gain on the account, right? So, for example, maybe a simple example would be, maybe you're just looking for a $50 profit or a $20 profit, or for example, maybe a 2% profit. Whatever that is another consideration you have to think about. And again, these are the reason I'm saying think about is you should have the option to do this. This is something that is up to you on what you're bullish on, what you're bearish on, and how you choose to enter and exit your positions if you're going to be using a grid system. The next one is what max drawdown will you choose to close out bad trades? And this is something I think if you're going to run grid systems, you have to consider. What point, if this market just keeps going and going against you, what max drawdown, preferably in percentage form, would you be looking to just cut the trades entirely? And this is up to you. Again, it might be 5% on the account, 10% on the account, 20%, 30%. If you're more risky, 30, 40, right? Something like that. You have to consider at what point are you going to stop out of the trades. Next, of course, we have to think about how are you going to get your hands on a robot? And this is a little bit of a plug for one of our software tools that we've built here at A1 Trading. You can see I'm wearing the shirt. A1 Trading builds software tools for traders, and one of our system is a automated grid system that allows you to plug in all of these variables that we've discussed. You control what you'd like to do with a grid, and you can build your own grid using the Grandmaster system. We'll leave a link down below in the description if you'd like to get your hands on a copy of the Grandmaster. Again, it's linked down below in the description for you. Let's now talk briefly about the pros and cons of this type of strategy. Now, if we're talking about pros, this can generate consistent returns. It's a nice high win rate style of trading because most of the time the market moves lower and then it kind of moves in waves. So it moves back the other direction, or moves higher and then it moves back lower, moves higher. Especially relevant to this is the currency market, which tends to move kind of over long periods of time just sideways. And then we talk about also, it's a relatively simple strategy to employ. Once you kind of get your rule set going, you now have a grid, it operates, and it just kind of does its thing over and over and over. Cons, this is also important. Every strategy has cons. EAs, which are expert advisors, like the one that we just talked about, the Grandmaster, EAs need 100% uptime to function. And I'm going to talk about a solution to this problem in just a moment. So stay tuned with me. Many times what people will use in order to keep their robots running. So if you decide you want to be a robot trader, if you're like, okay, this sounds cool to me, I want to be a robot trader, I've got something really cool for you. The sponsor of today's video has an awesome offer that I'm going to tell you all about, where you can actually run robots in an environment that stays on online for you all the time. And again, this pretty much knocks out this consideration or this con because again, EAs need 100% uptime. They need to be on a running computer. And to accompany that, we have a VPS service that's sponsored, 4X VPS. So stick around, I'll tell you more about that in just a moment. There will be links down below in the description for that. If you are already a robot trader or you are looking to get set up with your very own VPS for an incredible deal, the link will be down below and I'll talk about that in a moment. You still need to moderate activity. This is another con. You still got to kind of check in on the robots. You have to let systems run and you have to look into them and see how things are going. So that is one thing. And also, of course, drawdowns can occur, right? If you're building positions, drawdowns are going to happen with any strategy, but with grid systems, you can be holding on to a trade for a while it works itself out, and that can take some time. It also does require usually a larger trading account because again, you're going to have to be able to hold through those periods of drawdown. And as long as you've set up your system correctly where you're taking small trades, again, the drawdown will still happen no matter what, but you should be able to weather the storm if your position sizes are small enough and you're trading an asset that is not incredibly volatile. So that is kind of the idea with all of that. So now that we've talked about grid trading and different systems that can approach this, there's a couple things that if you're considering becoming a robotic trader or using automation to trade the markets, there's a couple things you need to consider. The first thing you need is, of course, you need some system or software to build that. We mentioned that earlier. You can find ours down below in the description, but also on top of that, I want to talk about something that is key to robot trading success. In order to trade using a robot, you need a system that can remain online 24/7 watching the markets for you. In order to do this, what you're going to probably want to consider is getting a VPS. And today's video sponsor, 4X VPS, is the #1 in the industry for just that. What they allow traders to do is essentially access a cloud computer where you can set up your expert advisors to run seamlessly overnight, throughout the day, and weather outages or anything like that are not going to impact your access to your robot trading the markets. This is a really important thing because if you think about it, if you're running a robot system and you lose internet or power, suddenly your trades could be unmonitored for a number of hours. So if you'd like to use 4X VPS for your robotic trading, then we've got a special discount code available for you down below in the description. Down below, like I said, you'll find a link and a promo code, which is NICVPS20, which gets you 20% off any of their programs. Again, that is NICVPS20, all one word, for 20% off any of their plans. Check it out, again, link down below in the description. Again, they are the #1 in the industry, and what they allow you to do is set up a server near you, wherever you are in the world. They've got tons of locations so that you can have near instant access or execution to your trading platform that you set up in the cloud. This is also really convenient for you because if you're a trader that's on the move, it can be really nice to go place to place with your laptop or with your phone or whatever, and you can still trust that your system is being traded in the cloud without any sort of interruptions or power outages or your computer dies or anything like that. You don't want to run into those issues. If you're going to be a robot trader, you need the right tools. That is a must. So again, I mentioned they have a discount code, which is linked down below in the description if you'd like to check out more details about 4X VPS. I also want to say they're one of the most professional and also some of the best and most highly rated reviews on the internet for people who are specifically robot traders looking for the right thing. Here's some of their Trustpilot reviews on the screen right now. As you can see, they have many happy customers. And I also want to say they have different pricing options that you can check out using the link in the description, but also on top of that, they do have a 14-day money back guarantee on their VPS plans, which just makes it that much easier for you guys to check it out, see if it's right for you. Again, it's very convenient having your own platform in the cloud to execute anytime you want and trust that your robotic systems can run seamlessly day in and day out. If you're looking to improve as a trader, we've got some cool free resources here that I wanted to share as we close today's video. Down below in the description, there is a link to join our Discord channel or our Telegram channel. And we also have our website, a1trading.com, where traders can get access access to free course material to help you improve as a trader. Remember, we are also live Monday through Friday on this channel around 9:30 a.m. US Eastern, broadcasting most live news events and that sort of thing. So hope to see you there. And also, we do have a couple videos here showing up on the screen. If either of these seems like it might be helpful to you, then make sure to click here or here, and we'll see you there.